Hello out there to all the traders of Oriental Pacific Futures based in Malaysia and all around the world. Well, this is Nawang here from bursamarketplace.com, and I'm one of your favorite market opinion leaders giving you here on the weekly CPO trading outlook, which is listed in the Bursa Malaysia. Alright, the FCPO active month May has been expired on last Friday, and the active month will be rolling over to the June delivery contract on this Monday onwards, and this outlook will cover on the date 16 up to the 20th of March in the year 21.5. Alright, on last week, market was a pretty weak, alright, and closing on the downside based on the weekly chart, which the price settled at 2247, and that was 2,247 ringgit per ton in the FCPO prices. Alright, based on the weekly chart, we shall kick off on the outlook for this coming week. We realize that the market has been down on a weekly basis for the last 2 weeks, and most likely this week market will continue to go lower with a crossing down of the two averaging line. Let us put the line a little bit more visible to all of you. Alright, as you can see here, it's about to cross down. Alright, the only thing is early part of this week, Monday or Tuesday or Wednesday, how far will the market pull up to hit a resistance before it comes down? Taking the 50% range of last week, we will expect the market may pull up to a resistance near to 2270 before it comes down again, which is somewhere around here. Alright, so that is based on the weekly chart, and from there we progress the time scale into the day chart and take a look. Alright, and on the day chart itself here, let us expand. As we can see, alright, the market actually closed on last Friday with a little bit of short covering. Alright, the short could be covering. So this week it is highly possible for the market to pull up sideways until it hovers around the EMA 200 averaging line before it comes down again. So this actually serves as a consolidation to the forecast that we mentioned earlier, that the market is possibly going to pull up to 2270 or even up to 2280 in the early part of this week before it comes down, and that is based on the day chart. Alright, on top of that, let us put in some indicators and take a look here. Alright, on weekly chart, sorry, on the daily chart, as you see here, on last Friday there's a contraction in the open interest, which means that it actually moves in line with what we expect, which is a lot of people could be closing their positions from the shorting side that comes down from the top here. So there's a possibility for market to continue close down on the open interest, where the price may actually move out a little bit to the top side around here, alright, in the early part of this coming week before it comes down again. Alright, so from the day chart, let us go into the 4-hourly chart and remove the indicator here. Alright, on the 4-hour chart, alright, on the 4-hour chart, let us make the line a little bit more visible here, and it shows that the market is still hovering in this region of 2260 on the 4-hour chart. So there's a possibility, as I mentioned, that the market will pull up to 2280, but going up to 2260, 2270, it looks like quite a high possibility. Alright, whether it will go up to 2280 or 2290, that will depend on the short covering momentum in the market in the early part of this week. Alright, and from the 4-hour chart, let us take a look at the hourly chart. Alright, hourly chart, as we see, there's a immediate double bottom here, so it serves as quite a strong support in the early part of this week. But if it goes down here, alright, then possibly we shall see a support line somewhere around here. So that actually moves quite in line with what we forecast at 270 to 80 could be a strong resistance. So on the overall this week, alright, let us do a summary here. So we're expecting the trend to be downwards. Alright, so the range could be moving from the top side 2270 to 280 and down. Alright, on the first support, if it breaks 2220, then we should be looking the market going a little bit lower and challenge 2,200 ringgit per ton on the support side, which is our highly visible and achievable target in this coming week. Alright, so that shall end on our videocast on behalf of Oriental Pacific Futures, and this is now one of your favorite market opinion leaders based in bursamarketplace.com. And this week the market is still prone to selling down, and continue to observe on the soil oil and the demand that comes in from the European region. Alright, so we expect the range to be moving down from 2280 all the way to 2,200 ringgit per ton in the June delivery contract. Thank you very much, and stay with us next week. We shall continue to give you an outlook. Bye bye.